The most recent price of crude oil just consistently moving up and up and up, over $90 a barrel right now. Although this is definitely hurting my pocket when it comes to filling my car up with gas, there is a certain portion of my portfolio that has been absolutely benefiting like crazy off of this price increase of oil. Now in this video, we're going to go through exactly which stock it is that I've been buying like crazy, and that's not only been benefiting like crazy off of the crude oil prices, but also could be offering some potential massive gains in the future. Now stick around to learn everything about which stock this is, because you are not going to want to miss a thing. So the stock I'm talking about, the stock that's been benefiting like crazy off of this oil surge over the last year or so now, is EPD, or Enterprise Products Partners. Now, since EPD's creation in 1968 as a simple wholesale marketer of natural gas liquids, Enterprise Products Partners has grown into one of America's largest midstream master limited partnerships, or MLPs, that services both producers and consumers of NGLs, natural gas, crude oil, refined products, and petrochemicals. The MLP service includes everything needed to get raw fossil fuels from the producer's wellhead to the end consumer in a ready-to-use state. More specifically, this process involves gathering, treating, processing, storage, and transportation. So as you can see from this image right here, EPD has an integrated system that does pretty much everything from point A to point B. So I suppose it shouldn't be too much of a surprise that EPD is up 11.47% year to date. And keep in mind, this is a stock that offers a massive dividend yield. So the fact that the stock is up over 11% is very significant, because keep in mind, a lot of stocks that offer massive dividend yields don't also see all that much price appreciation. They most of the time, for the most part, trade pretty sideways, which is what EPD has done during multiple different times periodically. But as you can see, ever since September of 2020, where EPD was trading around $16 or so per share, it has been moving up and up and up around $11 in share just over the last few years. Now, just a side note here before we look into EPD's dividend, this is a stock that I've had in my portfolio for many years now. I came across it when I first started dividend investing, to be honest, because it was offering a very high yield. So I got kind of lucky and I bought into some shares. And since then, for the most part, I have been stacking up shares of Enterprise Products. And as of right now, throughout my portfolios, I own anywhere from between 500 and 600 shares. And I definitely am considering adding more, even at these higher prices. Now, of course, if the price of crude oil moves down like crazy, a lot of the midstreams are also going to be somewhat affected. But what's cool about Enterprise Products is because it doesn't just deal with crude oil, they have a more diversified strategy, which means EPD should be doing pretty good no matter what comes next in the future. Now, looking a little bit deeper into EPD's dividend yield, this is one of the main reasons on why this stock got my attention a while ago. EPD's forward dividend yield, even with the stock price being up as much as it is in at 7.4%, which is absolutely huge. Now, EPD also does have some dividend growth, which we are going to see here in a second. 24 years dividend growth, a nice healthy payout ratio, and around 2.77% on the 5-year dividend growth rate. Now, EPD is a quarterly paying stock, which as of recently just raised their last dividend to 50 cents per share per quarter. 49 cents before that, and then 48 cents before that. So although the dividend growth for Enterprise Products has not necessarily been explosive, like I said earlier, this is more of a stock that you buy into to get your steady 8% return off the dividend and maybe a small capital appreciation off the share price. But what's crazy about EPD is that it's done more than that. It's actually now growing in share price like crazy, offering a massive dividend yield and having nice consistent dividend growth on top of that. Now, another very important thing that I like to do, especially for stocks or ETFs that offer a massive starting dividend yield, and what I mean by massive starting dividend yield is anywhere north of, I would say, 5 or 6%, is to take the time to chart out that stock or ETF and use total return as a metric. This is dividends and share price included, and look at how it's performed over multiple different time frames. So with dividends and share price included, EPD on the 6-month time frame has returned 11.39%, which is absolutely huge. On the year-to-date time frame, 17.89%, which if we were to chart out EPD next to the S&P 500, is actually outperforming the S&P 500 year-to-date, which again is incredible, especially for somewhat of a higher yielder, more boring, slow and steady stock. Now, on the last year time frame, EPD's returned around 11%, S&P's been up around 16%. The last 3 years, though, EPD has returned 103.95%. And this is with share price and dividends included. And this is what I meant earlier, that I got a little bit lucky by investing into something like EPD years ago, because I didn't necessarily think that it was going to grow in share price really whatsoever. Looking at its previous performance, I thought it was most likely going to trade sideways, maybe up a little bit, but the performance EPD has had over the last 3 years has been outstanding. SPY's up around 37% on the 3-year time frame, which also isn't bad at all. But regardless, any high yielder that's returned over 100% on the 3-year time frame should definitely at least get your attention and should definitely earn you at least to look into it. Another thing I like about enterprise products and why I've been buying so much of it over the past several years is the fact that the stock has a relatively low beta. With EPD having a beta of 0.8%, the stock for the most part doesn't move all that much, which I love as a long-term conservative dividend growth investor. Now, the last thing that I want to look into is if or if not the dividend safety score of enterprise products partners is going to be good or bad, considering it is a relatively high yielder and considering most stocks that yield over 5, 6, 7% have somewhat of a risky dividend, at least most of the time. But according to Simply Safe Dividend, they reaffirmed back last year that the dividend is relatively very safe. They said when the lockdown struck in the spring of 2020 and much of the developed world began to shelter in place, demand for fuel quickly evaporated, leading tumbling oil prices that turned negative for the first time in history. This sudden and drastic hit to the energy market was short-lived though, following by a quick economic rebound. After being the worst performing sector in 2020, energy proved the market leader last year. However, while the energy market at large had a banner year in 2021, energy's middlemen, the midstream service providers, like EPD, largely failed to keep pace with the sector. So this is talking about back in 2021. They then said Enterprise's strong balance sheet, coupled with its conservative payout ratio and diverse customer base, reduces the likelihood of a distribution cut during inevitable periods of industry turbulence. Because of these strengths in management demonstrated financial conservatism, we reaffirmed DPD with a safe dividend safety score. So for the dividend growth investors out there that might be a little bit worried that crude oil could potentially continue to move up in price, maybe even over $100 a barrel sometime soon here, buying into a high quality diversified midstream with a track record like enterprise products might be worth looking into. But now I want to hear from you guys down below. Does EPD enterprise products currently have a place in your portfolio? And if not, could it potentially in the future? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.